Good day everyone, I'm Randy Escala and I will be reporting asset classification rules. But before that, let us first know what is asset classification. Asset classification is a system of assigning assets into groups. Based on a number of common characteristics, various accounting rules are then applied to each asset group within the asset classification system to properly account for each one. The groups are also typically clustered for reporting purposes in the balance sheet. So here are the example of asset classification. The first is cash, which includes cash in checking accounts, petty cash, and deposit account. Second, receivables, includes trade receivables and receivable due from employees. Third, inventory, includes raw materials, work in process, and finished goods. And the last, fixed assets, includes buildings, computer equipment, computer software, furnitures and fixtures, and vehicles. So there are the words that we will encounter in this topic, such as ordinary asset and depreciable assets. So ordinary assets are all real properties of the real estate lessor, whether land or improvements, which are for rent or being offered for rent, or otherwise for use or being used in the trade or business. While depreciable asset is any asset that is eligible for tax and accounting purposes to book depreciation in accordance with the Internal Revenue Service or IRS rules. Depreciable asset can include vehicles, real estate, except land, computers and office and equipment, machinery, and heavy equipment. Depreciable assets are long-term asset. So, there are the 9 asset classification rules. So, the 9 asset classification rules are a property purchase for future use in business is an ordinary asset even though this purpose is later thwarted by circumstances beyond the taxpayer's control. Next, discontinuance of the active use of the property does not change its character previously established as a business property. Next, real, real properties being used or have been previously used in trade of the taxpayer shall be considered ordinary assets. Next, properties classified as ordinary asset for being used in business by a taxpayer not engaged in the real estate business are automatically converted to capital asset upon showing of proof that the same have not been used in business for more than 2 years prior to the consummation of the taxable transaction involving such property. Next, a depreciable asset is an ordinary asset even if it is fully depreciated or there is a failure to take depreciation during the period of ownership. Next, real properties used by an exempt corporation in its exempt operation are considered capital asset. Exempt corporation are not business. Next, the classification of property transferred by sale, barter or exchange, inheritance, donation, or declaration of property dividends shall depend on whether or not the acquirer uses it in business. Next, for real properties subject of involuntary transfers such as expropriation and foreclosure sale, the involuntariness of such sale shall have no effect on the classification of such property. The last, change in business from real estate to non-real estate business shall not change the classification of ordinary asset previously held. So, taxpayer engaged in real estate business includes real estate dealer, real estate developer, real estate lessor, and taxpayer habitually engaged in real estate business. Taxpayer habitually engaged in real estate business include those registered with the HURB or HUDCC as dealer or developer, or those with at least 6 taxable real estate sales transaction in the preceding year. So, here the illustration. Property previously used in business. Mr. Alfonso has a building which was previously used as an office and is a subject to periodic allowance for depreciation. In July 1, 2015, Mr. Alfonso implemented a strategic shift in his business operating, resulting to the relocation of its administrative office in another city and the resultant abandonment of his office. So, it means Mr. Alfonso ay may property na ginagamit sa business, which is yung building na ginamit niya bilang office niya para malaman niya yung value ng kanyang asset. Kaso, ang nag-implement siya ng strategic shift kung saan mare-relocate ang kanyang business sa ibang lugar. So, may iwan ang kanyang building pero yung property na yon ay kanya pa din. Ginamit lang sa kanyang business. So, here the case 1 of the illustration. Case 1, Mr. Alfonso is not engaged in real estate business. Effective July 2, 2017, more than 2 years from discontinuance of use. The old office building shall be reclassified as capital asset upon showing of proof that the same not been used for more than 2 years. Case 2. Mr. Alfonso engaged in real estate business. The old office shall continue to be an ordinary asset despite the abandonment of building the property from active use. So, it means Mr. Alfonso can be engaged and not engaged in the real estate business. If Mr. Alfonso discontinued and show proof and not used for more than 2 years and on the case number 2, it is a real estate business. Ever the old office has been abandoned. So that's all. Thank you.
My report is illustration 2 to 4. So, illustration 2, property acquired to be used in business. In June 1, 2014, Mr. Alfonso purchased a building to be used as a branch sale office. The building remained idle as of December 31, 2017 due to an ongoing civil war. So, sa case 1, Mr. Alfonso is engaged in real estate business. The property shall remain to be an ordinary asset. 2-year rule applies only properties which are classified as ordinary asset for being used in business property. Purchased for future use in business. Even though this is later thwarted by circumstances beyond the taxpayer control, does not lose its character as an ordinary asset. Case 2, Mr. Alfonso is engaged in real estate business. The property shall remain to be considered as an ordinary asset property acquired by taxpayer engaged in real estate businesses shall remain to be ordinary asset even discontinue from active use and even if they change the nature of their real estate businesses. So, nandito nga siya sa ating asset classification rule. So, a property purchased for further use in business is an ordinary asset even though this purpose is later thwarted by circumstances beyond the taxpayer's control. Isa pang classification rule ay yung discontinue of the active use of the property does not change its character previously established as an business property. So, sa illustration 2, hindi kailangan magbayad ng tax dahil wala namang kinikita sa loob ng 3 taon. Dahil nga, merong nagaganap na civil war. Kaya lang naman tayo nagbabayad ng tax kasi kumikita yung business na tinayo or meron tayong kinikitang sa ating business. So, next illustration 3. In illustration 3, disposal of property. Juan, a realty dealer, donated one of his house and lot inventory to his son as down of his upcoming marriage. His son shall use the same as his family residence. He also donated another house and lot as initial capital of his daughter who will commence a relative leasing business. The house and lot shall be considered capital asset to the son because he will not use it in business. The house and lot donated to the daughter shall be considered ordinary assets. The daughter because she will use it in a business. So, ang asset classification rule na under sa anak na lalaki ay ang properties classification as ordinary asset for being used in business by a taxpayer not engaged in the real estate businesses are automatically converted to capital asset upon showing of proof that the same have not been used in business for more than 2 years prior to the consummation of the taxable transaction involving such property. Kasi nga, hindi naman siya sa business gagamitin. At yung anak na babae naman ay under ng real properties being used or have been previously used in trade of the taxpayer shall be considered ordinary assets. Next is illustration per, which is in illustration per, exempt non-business operation. Bantay Bata Foundation own building A1 which is uses for its non-profit operation. It also owns another building A2 which is leased out to various commercial leases. Building A1 is a capital asset since it is employed in non-taxable operation. Building 2 is an ordinary asset since it is employed in taxable operation. Non-profit entities taxable to income tax when they engage in a profit-oriented or commercial activity. Sa illustration 4, under naman ng real properties used by an exempt corporation in its exempt operation are considered capital asset. Exempt corporation are not business. Real property used by an exempt corporation in its exempt operation such as a corporation included in the enumeration of Section 30 of the Code shall not be considered used for business purposes and therefore considered as capital asset under this regulation.
Hello, I am here to report to you the types of gains on dealings in properties. So first, we will define what is ordinary gain. So ordinary gain arises from the sale, exchange, and other disposition, including de facto, de retro sales, and other conditional sales of ordinary assets. While the capital gain arises from the sale, exchange, and other disposition, including the pacto de retro sales and other conditional sales of capital assets. So, ordinary assets or gains or arise from the sale nga, from the and from the other dispositions nang galing sa ordinary assets, of course. So, kapag nagkaroon ng gain ang ordinary asset, tawag doon is ordinary gain. While naman, kung nagkaroon ng gain sa capital asset, ang tawag doon is capital gain. So, let us proceed to the taxations of gains on dealings in properties. So, type of gain is ordinary gains and the capital gain. So, ang applicable taxation scheme ng ordinary gains is the regular income tax. So, when it is a ordinary gains, it is subject to regular income tax. While kapag naman capital gains, subjected siya to capital gain tax. But however, not all the capital gains are subject to capital gains tax. Most of them, so mas madami sa kanila, hindi lahat ng capital gains is subjected to capital gains tax. Most of them is subjected to regular income tax. So the following are the common capital gains transaction tax under the capital gains taxation scheme. So, yun yung dalawang two types ng capital gains subject to capital assets. So, number 1 is capital gains on the sale of domestic sold directly to the buyer. So, it means that this imposed to the sale of the domestic stocks which are not made through the Philippine Stock Exchange. So, in general, the tax is 15% on the net gain. And for foreign corporations, the tax is 5% on the first 100,000 pesos of the net gain and 10% on the excess of 100,000 pesos naman. So, there shall be a capital gains tax on this transaction if there shall be no capital gains. Kapag daw lost, kapag ang lumabas is net loss, so walang capital gain tax sa transaction. So, when directly selling to the buyer, the taxability will be 15%. So, yun ang the capital gains on the sale of domestic sold directly to the buyer. Directly to sa mismong buyer. Next types of capital gains subject to capital gains tax is capital gains on the sale of real properties not used in business. So, this imposed to absolute sale of real properties which are classified as capital assets. So, it is assumed that there is always a capital gain on such transaction. Therefore, the cost of the real property and other related costs are not relevant in computing for this tax. So, the taxable will be either on selling price, zonal value, and the assessor's value. So, yun naman yun kapag mayroong capital gains on the sale of real properties not used in business. In short, that all assets that is not used for business is under or subject to capital gains tax. So, next, let us proceed to scope of capital gains taxations. Gains on the sale, exchange, and other dispositions of domestic stocks directly to the buyer. So, kapag directly to the buyer and domestic stocks, ang tax rate niya is 15% capital gains tax. So, 15% yung ipapataw na tax sa domestic stocks directly to the buyer. So, yon 15%. While naman, kapag sale, exchange, and other dispositions of a real property in the Philippines, nasa Philippines siya, ang ipapataw nyo doon is 6%. 6% of the capital gains tax. Okay. Then, dagdag ko dun sa una, gain on the sales, exchange, and other dispositions of domestic stocks directly to the buyer. If ever na foreign corporation siya, it follows the 5% to 10% of capital gains tax. So, pag located ang real property sa Pilipinas, subjected siya ng 6% ng capital gains tax. Then, last, gains from the other capital assets, ang tax rate niya is the regular income tax. So, note that the Train Law changed the two-tiered tax structure, the 5% and the 10% capital gains tax to a flat 15% tax effective January 1, 2018. So, yun lang yung meaning ng types of gains on dealing in properties. So, kapag ordinary assets, ordinary gain siya. Kapag capital asset, capital gain siya. And may specific na tax rate. Kapag nag-excess, may sadyang tax rate for the domestic stocks, foreign stock, kapag located siya sa Philippines, and sa other capital assets. So, that's all, and thank you.